I'd like to call the November meeting of the Insurance Committee to order. Roll call, please.
Ms. Mary Petito,
Here.
Mr. Al Orchard, Ms. Tina Babin. Here. Dr. Dennis Dion.
Here.
Mr. Henry LaFont.
Here.
Randy Schwess.
Here.
All righty. First item of business is to review the medical plan reimbursement renewal as, reinsurance, I'm sorry. To review the medical plan reinsurance renewal as presented by Buddy LaDay with Gallagher Benefits and take appropriate action.
Thank you, Ms. Regita. And you're not completely wrong. It does reimburse for things after the deductible. So, but yeah, reinsurance. So this is the reinsurance piece, guys. So as y'all know, self-funded medical plan. It's a plan whereas you have a specific deductible on every person on the plan up to a certain amount of money. In this case, $300,000 that the school district covers those expenses. And after the $300,000, then a reinsurance policy kicks in. So it protects you from catastrophic losses. We've had those. We've had claimants that go over $1 million in 1 year. You get $300,000 and then the rest is covered by reinsurance and it's reimbursed to the school district. Okay. The key thing here to remember when we're walking into this, there are some big numbers, but this is only 6.5% of your actual expense. Okay. It's actually less than that. The fixed costs are 6.5%, which includes administrative costs. The majority of the plan costs come from the claims. Okay. So this is a very small percentage of the total cost of what it costs to run this self-insurance plan. The plan's currently with a company called BCS, which is a preferred carrier that Blue Cross Blue Shield of Louisiana coordinates with. As you know, Blue Cross Blue Shield is your administrator of your plan. The claims run through Blue Cross. They pay claims for you, and they coordinate with reinsurance to make sure you get reimbursement. We go to the ones that they prefer to work with so that they don't charge you an additional fee to use somebody outside of their preferred network of reinsurance carriers. So we went to 4 different carriers in this case. The incumbent came back with a renewal rate 12% above where the current rate is. And just to let y'all know, medical trend right now is running about 8.5%. So it has a lot to do with that. And the majority of that is pharmacy. Pharmacy is at 9% trend. And medical is actually a little bit below that. The incumbent is the only carrier, and this is the good news, that offered a reinsurance policy with no lasers. Okay, that means we don't have anybody who has a higher specific deductible than $300,000. In the past, we have had lasers as high as $1 million, where they have a sick individual on the plan, or it could be an employee or a dependent, where that they know that person's due to have extensive treatment for something, organ transplant, you name it. And so they say, look, because of that, we're not going to kick in until this point. We're not going to buy that claim. All right. So this is the only one that came back with no lasers. And that's very, very good news. So every single person is going to have a reinsurance specific of $300,000. Okay. On the report, you see that that's 12%, but right below it, you see what's the Blue Cross Blue Shield administrative cost. Okay. So your administrative cost actually went down slightly. You remember we went out RFP, we interviewed United, Blue Cross, we went out to others as well, and we stuck with Blue Cross Blue Shield. And if you take that into consideration, the fixed costs on the reinsurance and administrative costs is only going up 4.88% for next year if we combine the two. All right. So our recommendation is going to be to renew the BCS plan. The other thing I just wanted to throw out there when we're talking about fixed costs, that is a $69,000 increase in fixed costs. However, if you remember, we were able to get you guys a rate reduction on the other fixed cost, which is Humana. The Humana plan went down this year to the tune of $154,000. So your fixed savings for next year, even with this 12% increase in the reinsurance piece, is a fixed savings of about $85,000. So we're happy with the renewal. We did try to negotiate. It came in a lot higher at first, and we let the incumbent have the last look, and they were able to get back down to 12%. So we're happy about that. Delilah, who's not here tonight, she did a good job with it. So that's what we're going to recommend y'all take action to renew with BCS for next school year. Any questions?
Your motion?
I'll move.
Second, Mr. West. Are there any questions of Mr. LaDay? Yes.
So, sir, thank you for your report. So the difference between the renewal recommendation and option 1 is only the 25,000 for the deductible. Is that correct?
No, we're renewing at 300,000.
No, I know. I'm comparing it to the option one that you're showing in the column next to it.
Oh,
So I'm
that
trying to
you would be
understand.
you would be raising your specific to $325,000. That's correct.
Got you. And then, so the recommendation to keep it at 300,000 versus 325. So what's the,
Because if you go to 325, 3 is already a pretty high specific. It is. That's moved up over the years for cost savings purposes, just like what you're seeing right here. Okay, and so it'd be like, well, don't want to pay any higher fixed costs. Let's bump it. Let's bump it. And I'll be honest, 3 is a pretty high specific that I'm not really comfortable going beyond that, but we could. If you do that, what you're basically doing is you're taking on 25,000 of additional liability for every single person on the plan. Okay, 1,600 people. So you may have none of them go there. You may have 10 of them go there, right? I just feel comfortable with the 300 mark. This year we have 4 or 5 people that might get to 3 right now, or might not. They're right at the cusp, but we still got 3 more months of reporting. So again, I would recommend this, but it's a good question.
yeah, and I just wanted to get the comparisons there.
Yep.
I mean, you show them on the worksheet, and so I wanted us to know the difference and where we at. And the reason why you put it there was to show comparison with increasing that total deductible. But again, it can be factored times so many more. That extra 25 can be.
So you're saving 59 grand by doing that, okay? But you're taking on 1,500 times $25,000 worth of liability additional. Not that that's ever going to happen. I mean, actually,
Based on the total number that would go over that amount.
Correct.
Thank you.
So, with the rising cost of medical costs right now, does that take into effect that, I mean, the 325, I mean, it would be more likely that people would start to go over that 300.
We've seen different things. I mean, we've had some years where nobody hit spec. We've had some years where up to 10 people have hit specific. You just don't know what the population is going to do. However, to your point, our hope is, that's another reason, specific to the drug cost, okay? So right now, pharmaceuticals are making up 32.5% of your total plan spend, okay? The new Elixir plan that we're going to, whereas certain people on very high cost drugs that qualify will be able to get them at no cost, it won't hit the plan. Okay, so we were looking at one today, one particular individual. This person's medical spend year to date is $2,000, but their pharmaceutical is $180. Okay, we're hoping that person qualifies and gets that $108, and it never hits them or the plan. That's the hope. So the pharmaceutical is where we're hoping. And look, if the trend is good and it keeps going down, that'd be great, and then helps at renewal time. Yeah, definitely.
Any other questions? Any questions from the public? If not, we'll vote. No. Motion passes unanimously. Letter B, to receive an update of year-to-date medical plan performance from Buddy Leday with Gallagher Benefit Services.
So this is the aggregate report. I think we're pulling it up right now. There you go. Again, there's a lot more detailed reporting that comes to us. We just try to simplify it as easy as we can. And I know, Dr. Gia, you've mentioned before, possibly getting more in the weeds with this. And it's our intention after the new year with the new board to have an in-service and really get in the weeds on how this all operates so everybody can be very well versed and educated on how the plan works. But what you'll see here is the pay claims history. We go back to 13. We'll probably start cutting that off in the next few years, but the whole reason we showed that for so long, all the way back to 13, was to show it how one time y'all had surplus and how, if you don't make changes over time, then you'll run out that surplus. But we don't need to go all the way back 10 years. At this point, we're looking at January through this September of this year. Your gross claims at $15,286,976. Okay, little bit of food for thought. About 10 million of that is from the medical, and about 5.3 million is from pharmacy. Okay, So that's what we're looking at, and we're hoping that 5.3 drops substantially next year. Projection is 1.2 million in drop on that with Elixir. But you'll see September, thank God, was a little bit better month. We're at 1.4 in September. We just getting in October, starting to get our data in October, so we should have something next couple weeks. So this is obviously through 3 quarters. Specific reinsurance reimbursements, those 416,000, that's people mostly in the prior year that we got reimbursements at the beginning of this year that hit specific last year. Okay, so 416,000 last year. Drug rebates and subsidies at 1.6. Again, you'll see that number is up because we had a better contract with Express Scripts than Script Care. So the numbers in 22 are kind of picking up those 21 carryovers. But again, we got an even better contract next year with Elixir. So it shows the net claims less the reimbursements and the subsidies at 1.6 to 13.193. Fixed costs at $1,074,000. So you remember I started the presentation, which those fixed costs are only making up a small percentage, and there you see it. The Humana premium, again, we've saved a lot of money, and if you look back to when we first started with Humana, that was in 2019 back then, and we had a huge savings when that took place. Moving to Humana, and we got a reduction on Humana, so that number is going to go down next year. Total annual costs, total number of employees and retirees enrolled in the Blue Cross plan, employee and retiree funding, school board funding, school board additional funding. That's the money that we're not at the beginning of the year. So we're showing this on purpose to show there needs to be about $2.1 million additional allocated to the health plan to keep it afloat. That's the point, okay? But I know some things have been mentioned about rate changes and stuff. It's been over 5 years since we've changed the employee rates on this plan. So they have held steady for a while now, okay? The employee split funding, so essentially what's happening is you guys are paying almost 66% of the total cost of the plan, and 34% is coming from the employees and retirees, and then it shows the monthly average. So it's up 2.74 over last year, better than 15.77 the year before that. With fixed cost savings and projected pharmacy savings for next year, we're hoping to cover the medical trend. And we know y'all budgeted a little bit of money to cover in case it didn't, all right? So y'all are where y'all need to be in terms of budgeting and the things that we've done. But like I said before, we squeeze this turnip as much as we can squeeze it at this point in terms of going out for every possible savings we could find. Whether it be the carve-out, the pharmacy, and this year looking at the claims costs and looking at other carriers besides Blue Cross. So there's not much else we can do other than pump more money into the plan, charge more to the employees and retirees, or have claims costs go down, and we don't know that that'll happen. Any questions on this?
And, oh, I'm
Just
sorry.
I guess a general question. Buddy, it's my understanding that we have some retirees who did not pay into Medicare, correct? And how does that number affect what we do?
It really, it's their costs are essentially fixed cost wise the same as everybody else that's on the plan, okay, that's on the Blue Cross plan. It doesn't look at the age of the person, okay? So if they're older or younger, it's not age rated whatsoever. I'm not sure if that's what you're asking me.
Well, it must affect the amount of money we have to pay out on claims, right?
Okay, a big expense to the district, I think I know where you're going with this, is when somebody, let's just say, retires at 45 years old, okay, and they stay on the insurance, from 45 to 65, they're on the insurance, okay, on the Blue Cross self-funded plan. They can't get on Medicare till then. And so with the retirement rules and so forth and their allowance to keep it, when that person retires, you still got to replace them, but there's no attrition. They're not coming off the insurance. So if you're getting another person to replace the retired person. As far as the people that didn't pay into Medicare, it just acts like any other person, and that number's dwindling. There's not too many anymore. That's kind of phasing out right now, but they're still, I think we're about 40 in that range. So not many, and it's going down. So. Yeah.
The older people.
Yeah, it's not as many. Yeah.
Any other comments or questions? I just wanted to say, look, we talked to, Tina had asked about the rise in medical costs, and you can really see it in your monthly amounts, monthly averages. You can see where it started in 2020, how it's going up each month. Just a comment.
But I mean, we were at a point, and this is just, and when you look at this, it can be a little deceiving because back in 2016, y'all monthly average was $2,010,000, and now you're at 1.8. So it went down, but that's not due to medical costs going down. That's due to the retirees and the pharmacy program. This is pre-pharmacy RFP 2016. So 2017 was the first one we did. That's helped a lot.
Thank you very much for the job that you do for us, buddy. It's well appreciated. So any
Thank
other
you.
comments? If not,